Hello there, this is James, and you're about to watch the latest episode of the Primus Live webinar series. Now, we're about to start in about, about 4 minutes? I'm excited. I hope you're excited too, and I'll see you soon. Hello there, this is James, and you're watching the latest episode of the Primus Live webinar series. Now, before I introduce you to my very special co-host, remember, these little episodes are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way now, let me just give you a brief intro on my very special co-host. Her name is Kaya, and she is our head of investment research here at FXPRIMUS. Now, she's worked as portfolio and investment manager with exposure to both public and private markets. Before FXPRIMUS was lucky to get her, Kaya was a senior investment associate at a hedge fund in Singapore and a vice president at Bank of America Merrill Lynch. Welcome, Kaya.
James, hi, how are you? Good to be with you today.
Pleasure as always is always mine, my darling. How are you doing today? How's things?
Doing great. As we're nearing sort of the end of the second trading month of 2021, observing various different market developments. A few of these we will be discussing today.
Yes.
I would say today is a very interesting day on the markets. I see a lot of red. I see some green.
Yeah.
I think with that we can start and go through some of our main asset classes.
If you notice, I'm wearing a red handkerchief today, just to
You
sort
should
of
be wearing
obviously.
green.
I'm wearing red just so I can be bright and sort of like stand out with you, because your top is bright and beautiful. By the way, you look lovely. Okay. Yeah. Let's get started on what's going on.
Let's get started. I mean, from economic data perspective, I think the big update was around US retail sales. The data just came out and we had a positive pop of 5.3%, I believe.
Yes.
So definitely seeing a lot of stimulus checks going into retail spending, which is exactly what Treasury Secretary Yellen wants. Opposite to seeing money going into equities markets. So that's definitely positive news. We will see if that actually translates into increase in US GDP, which will be published next week, preliminary. However, on the equity side and on the currency side, I'm seeing a bit of mixed numbers, I would say. And if our production manager Mike would pull up my screen, I will show some of the interesting developments that are happening. So let's start with US dollar first. I'm looking at DXY, which is the US dollar index. We have been discussing US dollar during our previous lives. And I guess the sort of perspective was that US dollar is on an upward trend at the back of strong economic recovery in the States. And those who, again, know my charts, know the sort of rainbow logic I like to follow here. So I'm going to use daily charts to start with. And looking at today's movement, US dollar is up quite a lot. So it's 53 basis points. And for dollar, that's actually quite huge. So we can interpret this in a sort of two-way. One interpretation is that the markets are pricing in strong US recovery. But the alternative is here that we are seeing a bit of flight for safety, which US dollar often provides. But looking at the chart itself, seems to me that the dollar on a short-term basis is trending up because the moving averages are sort of all below the price, except for 200-day moving average, which is still well above the price. And on the RSI stochastic side, these are all neutral, and DMIs are definitely pointing higher as well, with DMI plus currently at 26.2. So James, I don't know what you think, but I think the market actually is pricing in pretty strong growth in the US.
To be fair with you, I actually would agree with you. I think this is more of a dollar strength move. The reason why I said that, you rightfully said just a minute ago, the dollar is also known as a safe haven. So sometimes you can see a strong dollar if you're seeing a flight to safety. We're not seeing that, are we, with the other safe haven currency pairs? I'm talking about the Japanese yen, the Swiss franc, and in particular, gold, which we'll talk about in a bit, obviously. So I would definitely say this is, without a doubt, well, not a doubt, not advice, trading advice, of course, but in my opinion, this is definitely more of a case of dollar strength on the back of hopefully seeing a economic recovery in the US, hopefully kick-started today with that surprisingly better than expected retail sales. I think they were expecting some improvement, but maybe not as big as it was. So obviously that's a good sign. So yeah, we are seeing dollar strength on the back of hope, in my opinion. I think you made a really valid point that because of retail sales, these stimulus checks, people are actually spending them. We spoke in previous episodes in quite a lot of depth that one of the things with the US market a little while back and up until presently, a lot of people were saving money, which is always worrying. But now on this side, they're spending money, which is a good sign for the US recovery, and particularly the US GDP potentially next week. So yeah, I'm on board with you on that. Dollar strength because people are thinking the US is going to get stronger.
Yes, all valid points. I mean, New York Fed has conducted a survey, and the sort of results say that about 30% of the money people have is going into savings. Other 30% is going into paying back debt, and the rest of it is going into spending. So with the retail sales now popping at 5.3, we can see we will see whether the savings portion actually will come a bit lower. But looking at the dollar here, I mean, there are actually quite a few key resistance levels. So I'm just going to use the same charting tools here on TradingView. Horizontal line shows that we do have a key resistance near 91, which has offered resistance before. Price has been able to break here on the 2nd, 3rd, 4th, 5th, and then immediately went again below the 91 key resistance / support level. So I would say once we see dollar breaking the 91 level decisively, then probably it's going to be on a sort of upward trend, and we could see a bit of pressure on US equities and also major counterparts of USD. Another asset class, or I shouldn't say asset class, but pair I want to pull up is Bitcoin USD. Bitcoin broke another very important resistance at 50,000, and now we are trading near 51,600. So another all-time high. Moving averages are very bullish. So again, very nice rainbow formation here. We can see that the upper Bollinger Band has offered a bit of resistance, but at this point, I would say that the trend is upwards. I don't see anything stopping the price unless there's some sort of macro event that maybe forces us to be a bit more risk off.
True. Can I interject just a little bit? Because obviously people have watched our previous episodes know how much I love Bitcoin, which of course I'm being incredibly sarcastic. I'm not a big fan of Bitcoin because I spoke about it for so long. And we are talking a little bit when we're talking about charts, about potential patterns, aren't we? And I'm seeing I'm completely out on a limb here. But I was looking at my chart earlier on of the Bitcoin on the daily, and I think in later episodes we would definitely do. I would like to do an episode purely on this, but I see a teeny weeny potential Elliott wave, and I'll tell you how I see it. If you bring it like that, perfect, Michael.
Like this works?
Yeah, that's perfect. Slightly, it's not brilliant, but I'm seeing something slightly, and I'll tell you about my theory on the 5th wave in a minute. If we have a look at what date was that? Oh, it's December time. That's it. That's sort of wave 1, a teeny weeny bit of wave 1. Okay. Then a little bit there, we got wave 2. I'm pointing to your screen. Wave 2. Then we had this big one all the way from, that's it, all the way up to the big top there. Go back to about the 11th. There we go, January the 11th. 9th, that's potentially wave 3. Then we had this drop off till about middle of February here, potentially wave 4. And now we have the potential of wave 5. Now, I'm out on a limb here, but I'm not saying that definitely is an Elliott wave pattern, but I'm just saying it's looking interesting. The other reason why this potentially could be wave 5 is not because I love Bitcoin so much or dislike Bitcoin so much, is wave 5, don't forget, usually tends to develop around the time when something is in the press a lot, even outside financial media. And again, a lot of people are talking about Bitcoin in the press. So yeah, anyway, not trading advice, just sort of point that out, play devil's advocate that maybe, just maybe, this could be a potential Elliott wave and we could be on wave 5. But again, not trading advice. Okay.
Yes, agreed. And just to sort of check, I'm going to pull Fibonacci retracement here, and I reckon I'll do that. I mean, there's 2 places where we could draw the Fibonacci retracement. We could use the bottom here, but let's just use this sort of retracement level, which was near the 20th. And we can pull it, let's say, where are we here at this point? So using sort of Fibonacci as a key resistance support level, we can see that quite nicely. We have one support which acted as a resistance at some point near 24% level.
Mhm.
We have a bit of empty space near 38, although you could actually debate that perhaps on the 10th of February and on 11th of February, this particular level here also offered a bit of a support. And from here, this particular tool doesn't allow me to sort of extend, but we could also see what would be 124 percentage level resistance going forward.
Yeah.
So when it comes to Bitcoin, we had a discussion last week with Harry around Bitcoin and how it could actually become mainstream. And within a week, we've gotten two major announcements, one from Bank of New York Mellon, the other one from MasterCard, about supporting digital assets. So MasterCard has said that they will support payments, but in stable coins only for now. So meaning a digital cryptocurrency that is pegged to a fiat currency. And Bank of New York Mellon said that they will custodize Bitcoin on behalf of their asset management clients. So the fact that two major financial institutions are building out infrastructure to accept and process crypto assets, I would say is a major step. And the fact that Tesla bought 1.5 billion is actually tiny compared to the fact that Bank of New York Mellon is already dedicating a team to build out the entire back office system. Those who have worked in a huge bank, they know how much development goes into supporting one asset class. So if they have now the crypto sort of back office team, I would say that's just major step.
True. And we mentioned also previously when we talked about obviously Tesla first, and like I say, we had other major institutional players wanting to get involved. Not only could we obviously see that the people are generally taking this legitimate currency now, but the volatility may slow down in this market. So it might be still, everything's always going to be volatile, but the fact of the matter is when this may come in, and like I say, if they do indeed peg it as well, it will sort of control the volatility. So we won't see such sharp swings like we're sort of used to whenever we discuss any sort of cryptocurrency. So that could be something to watch out for as well. Definitely. Okie dokie. What's the next thing we want to look at?
Let's look at oil as well, because oil has been sort of the central point of the reflation trade that we've been discussing a few times. So US oil is the instrument that I'm going to use. I'm going to look at daily chart first, just a second, just to make sure that everything's nicely visible. Again, oil has been in a very nice upward trend since the 9th of November, so-called Pfizer Monday. All the moving averages are supporting continuous upward trend. We do see a bit of overbought levels based on RSI and slow stochastics. But if the trend is very bullish for an extended time, then RSI and stochastics can remain in overbought levels. So these are not definitely those technicals that you want to take trade on, but they are your sort of guidance just to see where you are in the cycle. So I would say that at some point, most likely oil is going to have a bit of a breather, maybe either hold current levels. If you look at actually the candle here, then it looks like oil is a bit of undecisive today, what to do about today's price movement. But again, DMI plus dominating TMI minus with 38 versus 6. And also you see ADX at 53. So I would say on a weekly basis until let's say 3 to 6 weeks to go from today, oil should be in upward trajectory, definitely. What are your views on oil?
Like I say, it has been one of the success stories so far of January, 2021. And like I say, you did obviously clearly see it pick up a lot of pace, as you rightfully said, from the 9th of November, the magical day where we all begin to hope again. I'm looking at it too on a daily, and like I say, it is slightly undecided today. It's not as busy or decisive as it has been over the previous trading sessions. And there is, like I say, obviously we talked about candlesticks. There is a tiny little pattern at that top, which could indicate maybe a potential slowdown, but it's not slowing down. If I look at Brent as well, the North Sea oil was trading around 64. I would agree. I think maybe it would catch its breath, as in go a little bit sideways for the time being, while maybe the market digests some hopefully more positive information to come. But I don't see this overall bull run sort of slowly sort of finishing off. I see it maybe going into a bit of a range to catch its breath, potentially in the short to medium term.
Yeah, I'm just going to pull out the 1 hour chart as well, because sometimes that offers a bit of more visibility on the let's say short-term movement. And as we can see from here, indeed, we see a bit of like upward movement from 12th of February, and sort of oil hits its, not to say its peak, but the high upper range around the 50. And since then, it's been a bit of a sideways movement. And in terms of moving average, is dog's breakfast. So you can't really identify a clear trend from here. Totally. What you can see, though, is that the price has found 100-day moving average support very nicely. Touches support and then sort of bounces higher again. So yeah, I think that for the maybe daily movement, I would say probably the price is going to move sideways. Just going to look if we have any clear support resistance here. I mean, I suppose that the 8 period, or I should say 8 hour moving average offers a bit of resistance here. But again, other indicators are pretty neutral. So oil definitely unattractive.
Yeah, like I say, I think, like I say, it's had such a exciting run over the last sort of month or so since the beginning of January. I can see, like I say, especially on the hourly now, you can see it sort of catching its breath a little bit, ranging a bit. Potential area of interest support-wise, possibly around 59.35 sort of level, maybe potentially there on that, and resistance-wise, certainly the key level area of interest around $60.85. That's what I can currently see on a bit of a range there between those sort of marks. But let's see.
I mean, we will also have to see how's the weather condition in the US developing, because currently Texas, I think 2 million houses are without any power, any electricity. That has definitely given a bit of a boost to oil and in particular to LNG, which is liquid gas. And we started seeing actually liquid gas already picking up price about a month ago when the polar vortex arrived to Asia first, then to Europe, then to US. And even here in Cyprus this morning we had 0 degrees, which felt very cold, I have to say.
I told you. I did warn you that when
you like, I didn't believe you, but
I warned you. I'm a Brit, and people when I say to people over here I'm freezing, they're going, "You got no excuse. You're from England. It's even colder." And I'm sorry, I do find it really cold in January, February. So I was freezing as well, and I did warn you about it. So there you go. Yes. What next are we going to look at?
I think another big surprise today is from gold. I'm going to pull up gold first, look at the daily chart. Let me just reload that. So, spoken about gold with you, James, a lot, and we're seeing gold definitely falling through all the support levels. So we see that on a daily chart, gold has broken the lower Bollinger Band support level. We see the moving averages stacked in a rainbow fashion, but opposite. So meaning we do have a bearish build-up here. We see 8 period moving average 21.34. There's 50. And you also see that the 200-day moving average has crossed 50-day moving average. And this is something we have discussed with you. It's the famous death cross that has formed now for gold. And death cross effectively means that the price has entered into bear territory. So a lot of the institutional hedge funds are putting in their sell orders for gold now, because for them this is a very negative sign. On the other indicators, I mean, RSI is neutral at 33.2. We see stochastics neutral 29. DMI minus dominates, and it's taken a sort of swing higher. So it seems to me that also bearish momentum is building up based on DMIs and ADX. And the fact that ADX sits at 23.9 and is sort of increasing shows that there's more energy coming into the trend. So I would say daily chart for gold definitely bearish. I'm going to pop on the 1 hour chart as well.
Yeah.
I'm going to zoom in a bit just to make it easier to read. So yeah, on the 16th, 1 p.m., God knows what time zone this is at this point. We're talking about Cyprus time zone, so that's GMT +2.
Mm-hmm.
Again, gold just falls completely below all the support levels, testing the lower Bollinger Band support, breaking, regaining some of its energy, and now just trending lower and lower and lower. On the critical resistance levels, clearly it's the 8-period moving average. That's going to offer one level here. We're going to see one level here, and then the next one, I have to scroll out a lot. I can't even find the support on a daily chart.
Yeah.
So,
I can see. Look, I used Fenerbahce retracement, obviously, on gold for long-term trading on a daily, and I've had this Fenerbahce on my daily chart from the actually for over a year now. From around about February 24th, 2020, I started from the bottom of it, and I put it to the very top of the high around about 11th of August of last year. Okay, that's when obviously it broke the 2050 sort of level mark. And I've been sort of trading off the Fenerbahce levels for quite a while. Now, I see potentially a key support at the 50, according to that Fenerbahce retracement I've placed, potentially a key support of $1,757.62. Not the precise number, but around that ballpark number, okay, around that area. The last time it tested that area was back in November, where it got close to that before retracing back up and then raising above again in the 1,900 level. So yeah, I'm keeping an eye for a key support, certainly around 1,000 round, not exactly on, around $1,757.62. So I think that's the key for it to really sort of start rapidly falling. So that's the level of interest I have on it.
Yeah, that makes sense. And I mean, looking at the daily chart and you know, just using very, very basic support analysis, we can see maybe there's a bit of support forming here as well. But overall, if something is in a such strong sort of bearish trend and that the cross has formed, then I would say historical support levels do not matter that much because there's more emotion now involved than there's technical analysis. So gold, I mean, those who are contrarians, I suppose it's a good buying opportunity, not a trading advice, obviously.
No.
But in general, I think we need a very strong risk event for the gold to sort of take upward trend or upward move again. Would you agree?
Like I say, I would agree. I agree at the moment. I say the bears are certainly a lot more optimistic. Optimistic. Obviously, being bearish. Sorry, the bears are certainly a lot more in control currently at the moment. And obviously the retail sales coming in better today certainly hasn't helped. We'll have to see what the US GDP is in, but yeah, I mean, if it breaks that key level, I was saying that $1,757 mark, then yeah, it's the momentum's really going to push it, and then we are going to see it look like potentially next level, which is quite frightening if you're a gold bull. But yeah, I agree. The momentum is against it currently as it stands. Definitely.
I think for gold, we also have to keep an eye on US dollar because US dollar gold always tend to move in inverse direction. So the stronger the dollar, the weaker the gold generally, unless again you have some sort of volatility when correlations break down.
Yeah.
But just passing through, sorry.
Yeah, I say, unless of course you have like a major event, like you rightfully said, which scares the market, then obviously the safe haven status comes into play. Yeah. Okay. Great.
Just passing through some other asset classes. I mean, the other pairs, we see Kiwi dollar down today. Euro is down. GBP is down. We see Aussie dollar down against yen. Aussie dollar down against USD. USD yen. You know, again, it's down, but I wouldn't say it's that much. And then dollar gaining. So definitely a risk off day. And I think it only makes sense given how many all-time highs we've seen now for the last weeks. I mean, it's been huge moves in so many different asset classes and indices. So it does make sense for the market to take a bit of a breather, maybe to consolidate, and then we'll see what direction it's going to take us.
No, I totally agree.
But given that we have USD Swiss franc chart open here, I do want to show a bit of a formation, and that sort of ties to our topic today. I'm going to open up a hourly chart. I'm going to zoom in a bit because again it's a bit of a mess here. And I've already actually charted drawn on my chart. I hope the color is visible because I think I may have too many colors on my chart, so it may be a bit. In fact, I'm going to make this pink.
There you go. Matches your top.
There you go.
What a great idea.
It is my favorite color as well. So,
really?
And you can really. Oh, interesting.
Yeah. Interesting.
And it's actually very nicely drawn flag here. So those who have seen our previous video about formations on charts, beautiful flag formation. We do have a pole here as well. So I'm going to draw the pole as well here. Yeah. And the formation acted exactly how it should be. So it actually broke higher. And huge move on the 16th at 3 p.m. GMT +2 time zone. So I would say when it comes to formations and when it comes to technical analysis, my experience is that USD Swiss franc is actually one of the best ones to analyze because it does follow a lot of technical analysis principles, especially Fibonacci retracement levels, as well as all sorts of supports and resistance. So given Swiss franc is very much traded by institutional investors, I would say retail probably doesn't want to touch that as much. Seems that it follows exactly those statistical important data points, such as 24%, 38% is 58%.
Yeah. Okay.
Another pair I wanted to pull up was Kiwi dollar or Kiwi US dollar, which is NZD dollar. And I'm going to use my 4-hour chart. Once this loads properly, it does not want to load properly. Okay.
Always the way.
So how should one actually read a chart such as this? So again, it looks very messy. It's a bit difficult to read. I'm going to give a bit of practical guidance how I look at this particular chart. And NZD USD is something I look on a daily basis because this is one of the most traded pairs on our platform. So how would one start analyzing? So looking at 4-hour chart, you can see that on a short-term basis, on a let's say 16th Feb onwards, we can see very strong bearish momentum. We can see the moving averages do cross in a way that we can see 8-period moving average actually crossing below all other moving averages. So this should be an indicator that the short-term momentum has turned bearish. You may not want to take long positions if you are a momentum trader. You may want to take long position if you are a contrarian trader, depending on your thesis. Yeah. Moreover, you can see that the price is testing lower Bollinger Band support level. Again, Bollinger Bands do offer pretty strong support and resistance. Breaking out of this particular range is, I wouldn't say very common, especially for pairs that have very deep liquidity. And NZD USD has pretty deep liquidity. So the fact that the price is stopping here would tell me that most likely it's not going to move that much lower from this particular level. And also the price has moved below 200, I can't say day, but 200 period support level. And 200 always is a bit of a line in the sand, meaning once the price breaks below, we are again in a bearish territory. But if we look at shorter time frames, let's say anything less than 1 day, I would say that the 200 is not that strong support and resistance. For longer time frames, like a daily and weekly, 200 is absolutely critical to keep an eye on. For 4-hour one, yes and no. And the way one could look at these resistance levels, I would identify the first. I'm just going to use different chart here, horizontal line. So the first resistance level most likely is going to be here. Price will probably stop before it can go higher. And I would say the second resistance level would be here. So this would be around 0.72. And whenever you look at the price, by the way, we never talk about the absolute value. We always talk about the range around one particular value. Because again, these quotes can differ between different brokers. And looking at support,
So it's more of the area of interest. It's not a precise, like with gold, I was saying earlier on, it's not a precise number. It's the area around that sort of number there. That's what we're saying, isn't it?
That's the best term, actually, area of interest. So I should incorporate that into my vocabulary.
And I own the royalties of that saying, so you can take it. Okay, you have to pay me if you want to take it.
I'll take it already.
Oh, go on in. As it's you.
I'm talking about support levels here. So very, very clear support has formed near, I would say, 0.71, let's say 570. And going slightly lower, we can see another support point, area of interest near 0.71500 level. For those who want to trade that particular position, I would definitely keep an eye on these areas of interest. And when we talk about RSI, talking about stochastics is at this point oversold. Again, for those who want to enter a trade, looking at stochastic is important because they may show a point where the trend is going to change. So if I were to trade this particular position, so firstly, I don't trade contrarian positions. I trade momentum. I probably would avoid Kiwi dollar. But those who do take contrarian views, I would say this is actually quite nice position to take as a contrarian. But you will be going against DMI. That's about 17, which is actually negligible. However, you do go against ADX, which is about 28. So I'm just referring to this level here. And if DMI dominates that strongly, it means that there's quite a lot of energy in the momentum. So it's a bit of risky contrarian trend. At the same time, I think that, not a trading advice, I think that the trend may actually change for Kiwi dollar at this point.
Okay. I'm just looking at the levels which we just discussed that show on a daily as well. And you can certainly see like it is an area of interest because I always tend to look back.
And you're right.
Because I always tend to look back on where also if I'm looking at a shorter time frame, I look back on a longer time frame where previously the market has jumped in and or where the market is sold from, i.e. like a resistance becomes a support becomes a resistance. So I'm always checking out that, and I think that the level of support you mentioned, I think that is the key area of interest to watch out for. I'm totally in agreement with you on that.
And on the formation side of it, I think there's also an ascending flag that has formed here. I'm just trying to zoom out a bit, but sometimes this chart jumps around, so I'm just trying to make it slightly easier to read. Let's do it this way. How about I remove these? Nope, doesn't want to agree with me. Okay. Never mind. So what we're going to do, I'm going to use the trend line here. I guess you could debate that we have a bit of support level coming from this side. And you have the resistance, which is maybe slightly lower. We'll put it here. And again, it's never absolute when it comes to technical analysis. It's more really the level as such. So you could see a ascending wedge here. It has broken lower as well. So that sort of follows the logic for ascending wedge. And we speak about the volumes as well. We can see a bit of spike in the volume on the 16th. And at the back of this, we see a decisive move lower, breaking quite a few support levels.
No, okay. I can see that. Okay, good. So Kiwi dollar, something to keep an eye on, certainly.
Definitely.
Certainly.
Yeah.
Cool. So I think we've got a couple of little small questions. If we want to sort of move on to the questions. One actually is a request, and I love these requests. So keep it coming, because when you suggest an educational topic, we take note of it and we build around the topic. Like today's one, some people asked us to look a bit more formally on the charts and see if we can identify anything, etc., going on in the market which we've done. But one of the topics, one of our many people out there watching us has asked for, can we have a lesson about trading momentum next time? So we'll definitely make a note of that, and we'll definitely build up a course around that. Another question, this is obviously for you. How can I make my screen look like yours? So how do I make my chart as pretty as yours?
So as a sort of tool of the company, I do one-on-one sessions as well every now and then. So please reach out to your dedicated salesperson to know how we can do a one-on-one session with me, and then we can go through the charts that I have.
Actually,
thank you for the question, or thank you for the request.
Yeah, absolutely. Actually, there is a little bit of a cheat on this as well, because if you remember our very first episode on technical analysis, we actually showed on air, and it's recorded. It's on our YouTube channel. I can't remember the exact date we did it. I think it was one of the very, very first ones, so early December, maybe late November, and we actually showed on screen how to put in your moving averages, how you like to do it, how to do the rainbow moving averages. So we actually do show how to do it on that episode back in November. So please check that out. But like I say, do talk to part of our analysis team who's there for you on a day-to-day basis. If you do want a one-on-one with Kaya, please let us know, and we'll discuss how to arrange that. While we're waiting for any more questions, don't forget, ladies and gentlemen, next week we're doing a subject which I'm quite close with, and I quite like. We discussed it briefly in the past, and we'll be doing currency correlations, won't we? Which would be good.
Currency correlations, again, direct feedback from our viewers, because we did mention correlations on one of our pairs discussion, I would say, when we talk about majors and exotics. So James is going to take lead on this because it's close to his heart. And yeah, we will do a deep dive into the main pairs and correlations between them. Exactly.
So we'll be doing currency correlations next week. So I would take a little bit more of the center stage on that one, because that is a subject matter which I certainly I have a keen interest in. But brilliant question about the momentum. We will add that. Again, for the how to make it look as amazing as Kaya's, check out the episode back in November, and by all means, reach out to the analysis team who are here with you every single day to arrange how to meet up and have a one-on-one with Kaya. On that note, we've got no further questions currently, but please remember, everybody, keep the questions coming in, and your ideas for subjects and topics. Till next time, Kaya, would you like to say goodbye to the fine people?
Thank you, everyone, for joining. We'll see you next week again.
Yeah, absolutely. And I don't know why I've gone all blurry all of a sudden, but there it goes. Gone back to normal now. There you go. Maybe I look better when the screen's blurry. That's probably why. Anyway, signing off. Remember, these little episodes are always for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next week, every single one of you out there, trade safe.